Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call, the last Bazaar Morning Call for the week, and what a week it has been. We are coming to you live from the CNBC-TV18 studios here in Mumbai. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, morning.
Good morning, Prashant. Good morning, Nigel. That's the most important cue. I'm just so happy we have made it alive through the week. Thank God it's Friday. Happy Friday to you guys and, of course, to all our viewers.
You should wait till 3:30 to say that.
Yeah, that's right.
Oh, God, yes, there is one.
It's a power-packed day today, so a lot of results coming in.
About.
And post 3:30, we know who's off to the races.
Fast forwarding to 3:30, but yes, we have a day to get to.
Absolutely. Let's get the ball rolling. I mean, the ball is rolling in a very fast fashion. Both here in India and in the US. But I'll start with the US because we've had a ripper of a rally once again in the US. This is looking good. The Nasdaq was up another 3.25% in trade overnight. You know, the year-to-date gains on the Nasdaq are up 16%. On the S&P 500, it is up 8%, 9%. Right? So this is a reversal of the underperformance that we had in the US last year, 2022. And of course, I mean, the big outperformers like India, etc., are taking a bit of a backseat. But the tailwind is positive. That's, I think, the takeaway. It's not as if the US market is sulking. It's doing some of the best it's done in a long, long time. Why is this? I think a lot of people are asking. I think it's very simple. You've got very strong job market, labor market, and at the same time, you've got inflation, which seems to be coming under control. So the logic seems to be there is no recession. There is no hawkishness, so why sell? It's almost a bit of a, I don't want to, Goldilocks is a word which is, I think, used too often, but maybe tactical Goldilocks, right? I mean, for now, it seems to be things are under control on the inflation front and rates where perhaps the bulk of the rate hikes, etc., are already behind us. Markets are pricing in rate cuts later this year, and the Fed in the last meeting 2 days back did not push back, did not say, no, the market is wrong. And I think the market has taken it very, very positively. Today later, we get the US jobs data. I think this will be important. It kind of maybe reinforces all of that, what I said. If the number is super strong and it's a hot job market in the US, as the data will tell us at market opening, US market opening later today, I mean, it could turn. It could all turn as well because there are enough and more skeptics out there as well. But the price action is telling you that the market wants to do more here on the upside. All right, now let's come to the local market here. And I think the big issue has been what's been happening with the Adani Group stock. So I'll start there. You've got two names now in the F&O ban. Ambuja Cements was already in F&O ban, futures and options ban. And you've got Adani Ports also, which has now entered the F&O ban, which basically means you can only reduce open interest. You can't add open interest. What does it do? It basically, reduces volumes, most definitely. And perhaps reduces a little bit of volatility as well. The worry has been that for the group and those watching on the long side, on the optimistic side, that perhaps there has been too much shorting, etc., which has been going on. And to that impact, there is this other sort of thing which also came through after market hours. Adani Enterprises, Ports and Ambuja Cements have been put under the additional surveillance mechanism, the ASM framework of SEBI. What this means basically is that, if you want to take a position in any of these stocks, the minimum margin requirement is 50% and it can go all the way to 100%. Now, the point is, if you are trading, cash stocks, I mean, if you're trading in the cash market, anyway, it doesn't matter because, technically you need only 20% as margin. But nowadays, I mean, it's T+1, so it doesn't make that much of a difference. But on the futures and option side, I think this does make a lot of difference because you have to provide at least 50% and in some cases up to 100% in terms of margins to the nominal value of the contracts outstanding, both on the long side and short side. And I think this perhaps is a big one in terms of reducing volumes in these stocks, and also reducing the volatility that we have seen. Will selling pressure abate? I mean, we'll have to wait out, but I think the volatility perhaps does go down a tad bit, I think significantly actually, with these two measures coming through. For now, if you have cash shares and if your intention is to sell, no problem. I mean, you can sell. All right, now, I said this yesterday, and I think this is important to re-emphasize. I think we saw some of this yesterday. The incremental impact of what's happening on the Adani side, on the Adani Group stocks, will go down. I think there is no doubt about it, and I think we're already starting to see that. The market perhaps will move on. It's got enough other cues to respond to. On the Nifty, just a couple of levels. So, on the way up, the 20-day moving average stands at 17,905. I think that's the number to kind of cross. A good close above at least short-term moving averages will add to confidence. On the way down, the budget day low was 17,353, which becomes important. It must be defended. We're exactly in the middle of this range that I put out, the 20-day and the budget day low. The Bank Nifty had a positive day. The Nifty ended flat, but the Bank Nifty was up 0.5% yesterday, and that's good. The up move can continue. On the Bank Nifty is looking a little positive. The low of 39,490 must be defended here on the Bank Nifty. And on the way up, it's a 20-day again, which comes into play. That stands at 41,877. You need sort of good closes above these to kind of change the sentiment a little bit. The good thing is we've got global support, global tailwind. How much we're able to sort of latch on to that will depend on how fast we are able to get out of this local situation we find ourselves in. Guys, hi.
Hi, Prashant. That global tailwind that you're speaking of, I was just looking at the latest moves. Hong Kong, by the way, is down 1.5% right now. This is despite the fact that the Caixin PMI numbers, the services side PMI numbers are decent. But markets are choosing to take some money off the table, and that's what's happening across Asia this morning. Most of the regional markets, including mainland China, are all trending down. By the way, in after hours, Prashant, while of course, we had that great reaction on Meta, but in after hours, Apple's numbers and Alphabet's numbers have kind of missed expectations. Those stocks were down. So in after hours trading, there was some red on the US screen. So we'll see how that plays out. But of course, yesterday was a great day and it's been a great run on for the NASDAQ. I just want to point out one of the key problems for our market, and that's FII selling, and that's just not letting up. We just want to put the numbers out there for reference. Yesterday's sell number, these are cash market sell numbers that we're talking about. Again, you had a sort of drawdown of over 3,000 crores. Domestic institutions continue to try and counter that. That's been the story of many months. Overall, in January, this is a sell number. You're almost touching 29,000 crores of selling. And this is higher than what we've seen in the last couple of months. I went back and saw data across, let's say, the last 5 months or so. We were okay in November, December. That's when things were looking better. And this is a whole wave of selling. And how much of it can be constantly digested by domestic funds. Insurance companies, remember, will have their own sort of bag of woes to talk about, but even mutual funds, that's of course a point of debate. On the Adani group, Prashant has mentioned the ASM impact, so we're going to watch out for all of these stocks and try and get you some more analysis on how exactly the new margin norms play in. Remember, it's 50% or the prevailing margin, whatever is higher, and it can go up to 100% in certain cases, for instance, in intraday trades. So we will get you more details on this. Just want to point out the one positive development overnight was that there were a couple of dollar bonds on which payments were due last night. Reuters is saying that these payments were made. These are, of course, Reuters source-based stories that have come out. We haven't independently heard back from the Adani group on this, so we'll wait by to see if they offer any more clarity. But Reuters reporting that they made the payments they had to make on a couple of these bonds. One of them was for Adani Ports, the other was for Adani Transmission. Yes, now, some of the Adani group companies have been removed from the Dow Jones Sustainability Index. No reason perhaps to panic right now, but it'll just keep people talking. We know some of the other index providers like MSCI, FTSE, they've all been saying that we're waiting and watching. We haven't had any confirmation of any index changes with respect to some of these Adani stocks, but that's going to continue to be a watch point. So, short point, the Adani group, Nigel, is going to keep us very busy. This group of stocks in terms of just the news flows coming in. And then it's Friday, but it's also a very heavy earnings Friday, right? From Big Daddy SBI to ITC to Bank of Baroda. It's just such a long list of earnings. So this Friday is not going to be the easiest one in terms of news. Well,
that's right. I'm expecting another volatile trading session for the Nifty itself. We're waking up to positive cues. However, as you said, you have three big earnings numbers that have come in post-market hours. And all three of them are disappointing from the United States. Apple, Amazon, as well as Alphabet, all three of them, in fact, are down 3 to around 4% in after hours. And to add to that, you have the jobs report as well. Since it's the first Friday, in the United States, you watch for the non-farm payrolls data. So plenty of action is what we're expecting. To our global domestic cues, though, I'm looking at SBI. Now, that's going to be very, very important, not just from a result perspective, but also it's going to be very, very important for the Nifty Bank, because commentary will be eyed from out there. Remember, we have got a couple of report-based, numbers that are coming out of there with regard to the exposure to Adani. So getting clarity from the management will be quite important out there. The Nifty Bank, though, everyone's been talking about the way it's been underperforming. I'll tell you what, it seems to be finding some support at around that 39,500 to around 40,000. For the last few days, we've gone there numerous times, and every time you go there, you get a bit of a bounce from there. So that appears to be a bit of a buy zone on the Nifty Bank itself. The Nifty over the last few sessions, well, we are talking about it being very volatile and moving in a big range of around 600 points. I'll tell you what, on a closing basis, it's not 600 points, it's 60 points. So for the last 5 sessions, the Nifty is stuck in this band around 58 to around 658 points actually is the closing band. So irrespective of what happens during the day, by the end of the day, it comes back home, and closes in that vicinity of around 17,600 to around 17,700 odd. What do the FIs do in the F&O market? Well, first they sold in the cash market. So the buy number that we saw was a bit of a flash in the pan, but they added close to 29,000 contracts on the short side, which takes their short positioning to around 83%. Looking at the options data, 17,600 call, 17,600 put. Well, between them, they added 55 lakh shares. Now, this is important. It appears as a short straddle that's playing out. What is that? The same strike, you write both the call as well as the put. So you pocket a premium of close to around 315 rupees. That's as of closing. But say on an average, it would be around 350 rupees odd. So for those that are playing the short straddle, they are bracing that by next Thursday, the range would be 17,250 to around 17,950. You add and subtract 350 from 17,600 odd. So it seems we're a bit in that range. SGX Nifty suggesting a gap up. I'm sure at some point of time, the Nifty moves back into the red and you'll get a dip. So don't chase this gap up is the advice, I think, for today's session.
Okay, so tread with caution, I guess, and that we can take with both hands given the nature of the market. Let's get you the day's equity call then. Chris Wood of Jefferies says if Jerome Powell has left the door open to further rate hikes, the market senses that a pause is coming. He says indeed it is quite possible to greed and fear that Fed's 25 basis points rate hike was the last, though money market futures are still expecting another 25 basis points of tightening to 4.75 to almost 5%. Certainly, he adds, greed and fear would be amazed if there was more than one 25 basis points rate hike. Chris says in greed and fear's view, wage pressures or the lack of them rather than the unemployment rate remain the key variable to monitor when it comes to the labor market.
Okay, well, let's get you some money market views as well. On the rupee, Bhaskar Panda of HDFC Bank says the week so far has been quite busy. After the US Fed hiked interest rates by 25 basis points, both the ECB and the Bank of England also hiked rates as was expected. The Indian government released the union budget as well. Dollar index looks weaker and oil prices have remained more or less range-bound. Yesterday, the rupee depreciated against the US dollar despite broader Asia ex-Japan gains against the USD owing to local factors. Given this backdrop, Bhaskar expects the dollar INR pair to trade in a range of between 81.95 to 82.2.
And here's Bhaskar's view on bonds. He says Indian bond yields have moved lower due to profit-taking post the budget and positive interpretation of the US Fed move as well as the Indian budget. Hence, Bhaskar expects the benchmark 10-year yield to trade in a range of 7.25 to 7.3% for the day.
All right, so that's views coming across on asset classes. Matt Orton is Chief Market Strategist at Raymond James Investment Management. He's joining us now to take some questions. Matt, good to have you with us here. Thank you very much. Have you been following the entire Adani saga here out of India, Matt? And I don't know if you have any thoughts on the subject. Yes.
Yeah, I have been following just because the Adani Group makes up a fairly large weight within the index, and I think it's one of the reasons we've seen underperformance. And there's been a narrative, I think, that's being spun amongst global investors that they're equating the success of the Adani Group really to the success of the Indian market. And I think that's been one of the reasons why there's been pressure. There's been outflows from a lot of international investors just leaving the Indian markets broadly, profit-taking because of the strong performance you had last year. So all of that is culminating into some more challenging performance. It's been a bigger underperformer within the emerging market indices. But at the end of the day, I don't think Indian markets can be fully equated with the Adani Group. Sure, there's certainly questions that need to be answered because of the Hindenburg report, but I wouldn't be chasing the stocks. I wouldn't be trying to catch a falling knife at this point, but it's so critical to the budget that was just released in India. It's critical to airports, to ports, to rails, to road construction. I can't see it being an institution that's going to go down. And at the end of the day, I think we wait for the news flow to settle, and then there's going to be opportunities. So, India's been an area that I had liked a lot I'm marginally less positive in the near term on Indian equities. But that being said, there's plenty of opportunities. Areas we've liked, information technology has continued to perform well. And I think it just highlights more of a global narrative that I've been saying to a lot of our clients, which is even though there's a lot of good news in the market, more broadly speaking, maybe outside of India right now, don't be chasing the market higher. Don't be feeding into some of the narratives and selling out of winners in the past. Just wait and see. Let some of the news settle and remain just a little bit more defensive for the time being.
Hi, Matt. Morning. We are getting a little bit worried, a little uncomfortable. Everyone's talking about 2023 starting off in style for global equities. Unfortunately, the Indian markets, after a very good 2022, we're underperforming a little bit, just to a little slow off the blocks, I would say. But as you said, you're quite positive on the Indian markets, but in the near term, you could be a little skittish, maybe because of valuations. If you see a bit of a correction, would you then be more positive on the Indian markets? What kind of a correction would you be looking at on the Indian markets to turn it to staying positive on Indian markets?
I would. I think some of the technical levels that you were mentioning earlier this morning, I think you bear those in mind. If those technical levels break, I think it becomes incrementally more attractive, because at the end of the day, India is one of the fastest growing global economies with a very, very aggressive budget, with its strong investment into the country, and with good GDP growth. So at the end of the day, the overall narrative still plays out. And there's a lot of companies with the possibility for margin expansion going forward. And that's what I want to see, the ability to grow earnings and have stable earnings. And I think there's a lot of good companies. So I think as the Indian market continues to go down, short of an uncontrolled downward spiral, if we correct 5% or so, I think it becomes more attractive to start dipping your toes. But I want to see where the news settles on all of these stories, and I want to make sure that there's not going to be any more incremental negative news coming out. I think you don't want to front run the news cycle.
Fair enough, Matt. So you're waiting for the news flow to abate. I think so are a lot of investors. But well, the news mill keeps on churning and moving forward, so much of news flow. But I want to come back to another point. I'm not sure if you're investing in China. If you're not putting more money to work in India as of now, where are you taking your money? And specifically, my question is to China. We know there's a lot of money that market has been attracting for obvious reasons. But is that just a tactical shift? Or is it sort of a re-rating which will play out, which means we'll constantly have to compete for attention vis-a-vis China?
So India, one of the attractive points of India, especially for global investors, was that it was an alternative to China, especially when China shut itself down for 3 years. And the Indian economy broadly remained open. That was a great alternative to China. The issue with China right now is regulatory crackdowns on companies. We've seen full-scale reversals of COVID policy. You've seen reversals with respect to some of the mega communication services and technology companies in China. And the big question is whether or not that can be trusted. So as I look at the emerging market complex, China versus India, I actually think the China reopening story is a great one, but you can lean into it without having to just own China. I think China's overbought in the near term. There are issues, but look at some of the other Asian emerging market countries like the Philippines, which has been an outperformer, Thailand, South Korea, and Taiwan, which are large semiconductor areas, and the market is becoming much more optimistic there. So I think you want to lean into the China reopening story, but you can do so by finding other countries that don't have those regulatory risks, that still have solid growth and are going to benefit from China reopening and more global trade.
All right, Matt, thanks very much. Great speaking with you. Appreciate you joining in with that perspective. We'll take a quick commercial break here, and we'll come back with a focus on stocks. Our top stocks, which our research team gets to you every day. That's lined up when we return in just a bit.
When timeless European design meets cutting-edge technology, it's QO. QO, European Bath Lounges.
For how long will you continue being tensed about the future? With LIC's new Pension Plus, make your own pension plan because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension so that you grow young and tension-free. LIC, har pal aapke saath.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
What if you were a major transit system with billions of passengers taking millions of trips every year? You weren't about to let any cyber attacks slow you down. So you partner with IBM to build a security architecture to keep your data, network, and applications protected. Now you can tackle threats so they don't bring you to a grinding halt. And everyone's going places, including you. Let's create cybersecurity that keeps your business on track. IBM, let's create.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high!
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, har pal aapke saath.
Bertram, meet Hector, the car that pampers me.
Pampers you, sir? Only a car.
Hello, MG. Good morning.
Good morning. What a beautiful day.
This is my favorite. Traffic jam assist. Ta-da!
Sir, please.
Relax. Hector's got this. Told you, it pampers me.
The next-gen MG Hector. It's a human thing.
Get the grip of good health even after 50. Presenting now Star Health Premier Insurance Policy. Always at your doorstep.
Welcome back. Well, it is time to get stock specific. As we do that, just pointing out the SGX Nifty is still nicely in positive territory, still about 0.3% higher. Yeah, we've got some gains going on the SGX Nifty. Though other markets, as we've been pointing out in Asia, they are taking some money off the table. We are looking okay on the SGX. But it is time to talk about stocks. A lot of earnings that came in post hours, market hours yesterday, and our entire research team is standing by with the CNBC-TV18 list of top stocks to watch out for this morning. Good morning, everybody, and happy Friday, first of all. Mangalam, let's start with you, the big one, Tata Consumer.
Well, I haven't seen more inline numbers than this in my life. In fact, revenues at 3,475 crores. The street was working with a number of what? 3,450 crores. You look at the EBITDA, 454 crores. The street was working with a number of 455 crores. The net profit actually came in at 364 crores, and that's higher than expectations. That's primarily because of an exceptional. You strip off the exceptional, it's again absolutely in line. Not just that, you know, even the segments. India revenues grew 29%. The street was working 26 to 28%. Domestic beverages revenues declined by 9%. Again, the expectation was an 8 to 9% decline. And international revenue grew 4%. What was the expectation? 4 to 5%. So, inline numbers, see some green there.
Okay, all right. Thanks a lot for that. Mangalam, well, the Hinduja Group is looking to hike its stake in IndusInd Bank after the recent revision in RBI's private bank ownership guidelines. Sources have told CNBC-TV18, however, the promoters would need RBI's explicit permission to do so, which is yet to be sought. Ritu joins us to fill us in on this important story that she's tracking. Ritu?
That's right. We understand that the Hindujas are in the process of making an application to the RBI to hike their stake in IndusInd Bank to up to 26%. Currently, the Hindujas own about 16.51% as of December, with voting shares at 15.16%. If the RBI does give them this approval, there's a few ways to go about it. One would be to buy additional shares through the open market, but there it would be subject to the overall foreign shareholding cap of 74%, so limited headroom. The other way would be for the bank to issue shares via a QIP or preference shares, but that route we understand is unlikely, at least at this point of time, because IndusInd Bank is not looking to raise equity capital in the near future. So we'll we'll have to see how the promoters proceed, but the first important step would be to secure the RBI nod.
All right, that's an important story, and we'll get you more on that, Ritu. Thanks very much for that. Berger Paints is the next one we are talking about. Mangalam is here with more on the numbers. Mangalam, hi, morning.
Good morning. So, weak performance coming in from Berger Paints. I mean, the top line grew by about 5.5%. The street was working with a number of about 8% in terms of growth, but that was largely anticipated on account of the weakness that we saw in Asian Paints itself. What surprised the street, however, was the weakness that we saw in their gross margins and EBITDA margins, both year-on-year and quarter-on-quarter. The company said they were sitting on high-cost inventory, but EBITDA was down 11% year-on-year. The net profit was down almost 20%. Gross margins down about 200 basis points year-on-year and also about 120 basis points quarter-on-quarter. Importantly, domestic volume growth of the company grew by 6.6%. That was higher than the industry, so they may have gained some market share. We see some red here, but at the same time, let's see whether there is some recovery given the outlook for the next quarter.
Okay, got that, Mangalam. Thanks for the update there. Let's go across to Surabhi for Aditya Birla Capital. Surabhi?
Hi, thanks for that. So Aditya Birla Capital reported a good set of numbers. Their consolidated revenues was up 6% sequentially at 770 crores and their PAT was up 9% at 531 crores. The lending business and the housing finance business, which forms a large part of their revenues, continue to deliver growth. In their NBFC business, the lending book was up 12% and the net interest margin came in at 7% versus 6.5% in the previous quarter. Their PBT in the business was up 11% at 540 crores. In the housing finance business, the lending book was up 3% at 1.28 lakh crores and their net interest margin came in at 5.35%. The life insurance business also continued to show good APE and VNB growth. Their individual APE was up 12% and their VNB margins came in at 20%. All in all, a good set of numbers by AB Capital.
Good numbers from AB Capital, but Reema's back with us to tell us about Apollo Tyres as well as Crompton Consumer. Reema, how are those numbers?
Thanks so much for that. So let me start with Apollo Tyres, where it's a decent set of earnings. Top line growth, 12.5%, margin expansion, 120 basis points, and profits up 30%. Citi says Q3 was much ahead of their expectations, driven by a strong margin expansion. The India business beat was driven entirely due to higher margins, but in the European region business, both revenues and margins were ahead. Crompton Greaves Consumers, however, has reported a miss compared to expectations on all parameters. So revenue growth was just up 7%. Margins have fallen very sharply. Margins are down 430 basis points, 10% versus 14.3%, but the expectations were that margins would be at 11.8%. So the margin contraction is very steep, and that's driving a 41% decline in their profitability. So good for Apollo Tyres. It's a miss for Crompton Greaves Consumer.
Okay, all right. Well, let's bring in Rima. Thanks very much for that. Sonal is now joining in on MGL and Sheela Foam, which reported as well. Sonal, hi, morning.
Good morning, Prashant. Let me start with Mahanagar Gas. It was a margin beat and it was led by the steep price hikes that the company had taken, and that's why going with green on this one. On a quarter-on-quarter basis, revenues are up 7%, EBITDA up 1%, margins came in at 15.3% versus 16.2%, but it was versus an expectation of 14.2%. Profits also up 5% at 172 crore rupees versus an expectation of 137 crore rupees. Total volumes absolutely in line with estimates at 3.4 MMSCMD, and EBITDA per unit is slightly higher than expectations, and that is something that works for the company. Additionally, stock valuations are reasonable, cheapest in the city gas distribution space at 11.5 times one-year forward earnings. Moving on to Sheela Foam, the reported numbers were weak. Revenue declined 7.5%, EBITDA was down 22%, leading to a margin compression of around 150 basis points. Profits also declined by 10%. But the commentary was positive, where the company said that market share gains have been experienced by them, and expansion in gross margins was to the tune of 400 basis points. It was just that other costs were higher, which led to lower margins. So the stock could open up in the red, but could see some green on the basis of the commentary.
Okay, got that. Sonal, thanks very much. Back to Rima. Rima, you're looking at a couple of tech earnings as well?
Two of them, Surbi. One is Birlasoft, the other one is eClerx. Now, Birlasoft already had fallen 8.5% yesterday after one of its key customers, Invacare, filed for bankruptcy. So the street was worried about the revenue impact, the receivables, etc. Now, Q3 numbers came post-market hours yesterday. Flat top-line growth. Constant currency revenues are flat. Margins are just down to 0.6%, and there is a loss this time of 16 crore. The key reason is the company has now created a provision of 151 crore against the receivables that they're expecting from Invacare. So that's the reason for the loss this time, and the margins dropping off to less than 1%. eClerx, on the other hand, a steady set of earnings. So revenue growth 3.2% quarter on quarter. Margins are pretty flat, just down marginally. A couple of the analysts I spoke to indicated that eClerx margins have positively surprised them, and profits are up 4.2%. So eClerx is steady. Birlasoft already fell yesterday. So how much of the weak earnings is in the price remains to be seen. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Manisha Gupta. She joins us to wrap up all the commodity market action overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, I'm looking at the dollar index, which has seen a very smart rebound from a 9-month low of 100.8 yesterday to 101.8 right now. And that clearly seems to be weighing on many of these commodities. So the gold prices, after hitting a 9-month high of $1,970 per ounce, are trading at $1,920 per ounce right now. So a 2% tough cut in gold and silver, both of these commodities, is how we traded, with a sharp sell-off in crude oil prices also continues, where we are now looking at 4.5% of a cut coming in for this week itself. In the metals as a sector as well, steel has seen some decline, so has aluminum, but the copper prices are trading firm, and this is because of supply disruption at La Bamba copper mine in Peru, which accounts for 2% of metal worldwide. So barring the supply concerns from copper, almost everything else seems to be reeling under the strength of US dollar.
All right, Manisha, thanks very much for that. So that's commodities, hard metals in focus. We take a break here. Up next, Keki Mistry, Vice Chairman and CEO at HDFC Ltd, joins in to discuss their third quarter earnings. We'll also connect with Gopal Mahadevan, Chief Financial Officer and whole-time Director at Ashok Leyland, to discuss their third quarter earnings. So stay tuned, lots coming up.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
For how long will you continue being tensed about the future? With LIC's new Pension Plus, make your own pension plan, because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension, so that you grow young and tension-free. LIC, har pal aapke saath.
When timeless European design meets cutting-edge technology, it's QO. QO, European bath lounges.
It's the electric SUV with the fastest acceleration in India. It's the most spacious in the C segment, and it can be yours now. Starts at rupees 15.99 lakhs. Bookings open on 26th January 2023.
That's the boss's cabin. The canteen is behind. Morning, ma'am. Morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
अपने घर और कमर्शियल स्पेसेस को बनाइए अल्ट्रा मॉडर्न, इनोवेटिव, इको-फ्रेंडली with quick installation. All this at the one-stop destination. Europatik.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC Pension and Group Scheme.
Welcome back. You're tuned into Bazaar Morning Call. Well, for starters, the SGX is suggesting a good positive opening, but I'll tell you what, things are going to be very, very volatile during the course of the day. Plenty of global as well as domestic cubes are lined up. Well, to help us out with a couple of stock-specific action as well as some fundamental analysis, we're joined by Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking. Hi, Nishal. Good morning. Thanks so much for joining in. Nishal, let's focus on the group that's been in focus for the last 1 week or so, the Adani Group. Some of those stocks, Adani Ports, Ambuja Cements, as well as ACC, valuation-wise, maybe they've come to, normal levels or attractive levels. Do you believe in that, and would you advise buying into them?
Morning, Nigel. So I think there are two parts to this question, basically, whether they have come to an attractive level, basically, as far as valuation is concerned. And the second part is basically whether you should buy into it for the moment or not. So I agree with your first point, basically. I think, yes, they are both Ambuja, ACC, and even Adani Ports have come to a very attractive level at this moment. But I think let the dust settle down, basically, on this crisis. Let it settle down. So I think wait for a few more days to see basically where it is headed. And then you should start maybe biting into it. For the moment, avoid all these counters.
Okay, Nishal, stay on with us. We'll come back with more questions, but we also have to look at the HDFC earnings. Now, HDFC posted a disappointing set for the third quarter. AUM growth has weakened to come in at a 6-quarter low, and profit is below what the street was expecting. My colleague Abhishek caught up with K.K. Mistry, Vice Chairman and CEO at HDFC, and he began by asking him about the declining loan growth trend that we've seen this quarter.
I think very clearly the slowdown that you are talking about is in the non-individual category. If you look at our loan book growth, our individual loan book growth was 18%. And historically, if you look at the last 6 or 8 quarters, this is the second largest growth rate we've ever had. September was the highest growth rate, which was 20%, and this time it is 18.4% or so. Now, part of the reason is that period, April, May, June, was in the previous year, was a period which was affected by the second wave of COVID. And therefore, when we were comparing the first and second quarter with last year, we were comparing it with a very weak previous year because of the COVID impact. That gets neutralized over a period of time. So third quarter is actual growth, what we are seeing, and the growth is healthy. It continues to be healthy at about 18.3, 18.4%. What you are referring to my mind, is the overall loan book growth, which is arising out of the reduction in the non-individual loans. Now, non-individual loans have shown a decline. There are two reasons for that. One reason is that construction finance loans, where there is a reasonably good pipeline, construction finance loans do not get dispersed the moment they are approved. Unlike, let's say, a corporate loan or a lease rental discounting loan. A construction finance loan is linked to the stage of construction. So as the developer constructs, as he builds, he needs money and we disperse money. So it's linked to construction. And construction takes a 4 to 5 year time frame before it gets completed. Now, the period from 2017 to 20 was a period of slow growth in the real estate sector, and loans given and projects launched at that time would be typically projects for which you'd be dispersing today.
Well, in a rising interest rate scenario, we have seen yields of all the NBFCs, banks, etc. Going on really well, and that is aiding the net interest margin and spreads as well. Going ahead, incrementally, your cost of funds may rise given the fact that we are in a rising interest rate scenario. So what is the outlook on net interest margin and spreads going ahead?
Our net interest margin over the last 10 years or more, quarter after quarter, have always been in a range of 3.3 to 3.5. For the period ended September, both for the quarter ended September, as well as for the 9-month period ended September, our net interest margin was at the higher end of that range, which is 3.5%. Interest rates go up. Immediately after, when interest rates go up, the lending rates also go up. So they are completely matched. But what happens is when we increase the lending rates, particularly to individual customers, our agreement with the customers over the years has been that the rate increase comes once in 3 months. So 3 months from the date you've taken the loan, every 3 months from the date you've taken the loan amount, the interest rate gets repriced. And therefore, any increase or decrease in interest rates comes over a period of 3 months. So this gets neutralized. So as long as rates sort of stabilize, the cost of funding should also stabilize. And the lending rates will actually start going up. So theoretically, if there is no increase in lending rates in this quarter, then lending rates would, the effect of the higher increase in the rates will get affected in this quarter, whereas costs would remain broadly the same. It all depends on whether RBI increases rates or not.
A two-part question on the merger front. The merger timeline, would you be sticking with the June 2023 date that you have given?
So the merger should happen as scheduled. June or July would typically be the time when the merger gets completed in all possible respects. There is the NCLT approval or the NCLT hearing, which is going to take place today, which is 3rd of February. And once the NCLT hearing is completed, then we still have to go through certain processes. We've asked for forbearance from RBI. We still haven't heard from them. But all these things will fall into place over the next 2 or 3 months. So June, July, pretty much on track.
All right, that's the HDFC management taking us through the earnings. Abhishek, thanks very much for taking us through that conversation. Now, the other one is Ashok Leyland, which posted a solid third quarter earnings with revenues rising over 60% and margins expanding by 500 basis points this quarter. Additionally, the company has also seen a 23% jump in total sales for the month of January. Gopal Mahadevan is CFO and whole-time director of the company. He's joining us now to take a few questions. Mr. Mahadevan, good to have you with us here. How much market share have you gained recently? Could you tell us what the progression has been like and what is it now?
See, over the last 9 months, our market share has actually moved from, we have gained about 6.8%. You know, we are at 31.7%. And so if you look at that from, if for the quarter, we possibly have gained about, again, almost the same number. So, you know, we have steadily been increasing our market share. Our revenues have gone up, our margins have improved. And over the, I would say the quarter, we have also generated cash and our net debt levels are also quite comfortable. So overall, we have been quite satisfied with the performance. And we have gained share across product segments and predominantly across all product segments and also across geographies. So, it has not been just a pure select geography in which we have gained market share.
All right. So what could growth look like in FY24, both for the industry as well as for Ashok Leyland?
We haven't given an outlook, but hopefully we are expecting that the growth in FY24 should be double digit.
Do you, Mr. Mahadevan, do you think that you can get back to double-digit margins, perhaps in the first half of next year? What's the outlook on the operational front?
So we are, over the medium term, looking at double-digit, for a full year basis, we are looking at double-digit expansion. And this will happen through a confluence of factors. One, we're assuming that the industry will continue to grow. We will continue to pursue cost efficiencies, people productivity. The third one is in all the alternative businesses, right? Like light commercial vehicle, spares and aftermarket, power solutions, defense, and most importantly, international. So we have certain plans to grow these areas of businesses as well. And these are higher margin businesses. So when you have a mix of, the large commercial vehicle business as well as the growth businesses, you would see that, it is quite possible to actually achieve the double-digit margin expansion.
Okay. Just one last to round it off with the budget, since we had this earlier in the week. How did you read the budget? And, pointedly, what does it throw up in terms of specific opportunities for Ashok Leyland?
I think there are 2-3 growth drivers that have, been mentioned in the budget. One is, of course, the GDP growth itself. The forecast India will continue to be one of the high growth economies in the world. The second one is sector specific. As you mentioned, there's a lot of focus on infrastructure, which augurs well for the commercial vehicle industry. The third one is, of course, I think there has also been some good news on the real estate front, which possibly will help. And the fourth one, I think at some point in time, the peak interest rates that we're seeing today will start to taper off, which is, again, another favorable thing that can happen, because despite the interest rates hardening, we've seen the commercial vehicle industry doing well. we believe that, once the interest rates tape off, you will see another positive that's coming in. So if all of this were to happen, there is no reason why we will not see another growth year in 2023-24. And we hope to participate and maybe exceed that growth. That's the aspiration.
Okay, well, that's an optimistic note to round things up on. Thanks very much, Mr. Mahadevan, for joining us this morning. Nishal, let me come back to you, and thank you very much for your patience for staying through those couple of important earnings calls. Let me actually get your thoughts on a stock like Ashok Leyland. You heard the management out there sounding very confident in terms of buying at current levels, looking at future projections. What's your take?
So my thought there remains to be that interest rates typically take around 4 to 6 months, especially in case of PVs and CVs, 4 to 6 months to get transmitted. So if we are peaking out maybe this month or the next, then it will take another 4 months or 6 months for it to actually start showing up in the final product. So I'm not as optimistic. Basically, I believe high interest rates are going to impact discretionary purchases. CVs, PVs historically has been impacted basically as far as high interest rates are concerned. So I would be a bit cautious basically.
Okay, all right. Initial request you to stay with us. For the time being, we'll slip into a snappy break. You come back, our technical experts will join us as well.
देश के हर पल में, कल आज और कल में, देश के हर पल में, कभी परछाई बनके, कभी विश्वास बनके, दिल में साहस का एहसास बनके, उम्मीदों को सच्चाई के रंग से सजाते हैं, मुश्किलें कोई हरदम साथ निभाते हैं, कल आज और कल में रहते हैं, देश के हर पल में रहते हैं, कल आज और कल में रहते हैं, देश के
1956 से आज तक LIC हर पल आपके साथ.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
चाहे खरीदना हो अपना घर या हो रिटायरमेंट के लिए फाइनेंशियल प्लानिंग, मुझे फ्यूचर की कोई चिंता नहीं, क्योंकि मेरे पीछे SMC है.
SMC, money wise, be wise.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
देखो देखो देखो, नया टीवी देखो. आहा, got the veggies from Chotu's shop? He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर, समझ कर, invest कर.
Suresh.
Yes, brother.
Please take care of it, huh?
Sure, I'll do it.
Really? You're concerned for it even if you're going to the village for just 2 days. But you never think about us this way.
Everything will be fine. My Rickshaw Union Group has taken LIC's Group Micro-Term Assurance Plan.
Papa!
Wow! Now, no matter what, my family will keep moving forward.
Get LIC's Group Micro-Term Assurance Plan. Keep your family secure.
Welcome back. Thanks. So it's still looking quite okay on the SGX, by the way. It's up about 0.5%. Not in sync with what's happening in China and in Hong Kong. Those are the markets that are really selling off. So it's pretty steady as far as our screens are concerned, Singapore Nifty. Let's go across to Anuj and get his sense on the trading setup for the day. Anuj, good morning.
Good morning, Surabhi. Good to be talking to you again. Well, you know what? On Monday, I celebrated my 43rd birthday, and by today, I'm sensing I'm 45. That kind of a week.
Come on, it's Friday, Anuj.
That's what
go
I'm
back
saying.
To being 35 today.
That's what
Friday.
I'm saying. So that's what I'm saying. So thank God it's Friday, and markets finally looking at some kind of a relief rally on a Friday. Yesterday was the first sign that some stability is coming back, ex of Adani Group stocks. I mean, Adani Group stocks were still down, but the market was willing to move on. Let me put it that way. I think the biggest cue today is actually SBI. And not just the numbers, but the press conference, which of course happens post-market hours. But that's something that we'll be cued into and see what they're saying. The other thing is NASDAQ, the way it's leading it, but has most of it now been priced in, especially with the way Meta had behaved. And yesterday's 3.5% move. My sense is that today there could be actually some profit taking in IT stocks, which have had a one-way rally. And banks can have a big rally today, actually, because there can be some short covering. As I said, NASDAQ is leading the move, but the Nifty IT is very close to a major double top, which is on the December 1, when the high was 31,227 and close was 31,120. We are very close to that. So that's why I said maybe today could be a profit-taking day in IT stocks. On the Nifty, the budget day high and low for me is an aberration. What I'm watching out for is 30th Jan low, which was a lower low for the market, and 31st Jan high, which was the higher high for the market. And in that case, that level is 17,735 on the upside. That's the resistance. First support, yesterday low 17,446 and Jan 30 low of 17,405. Those are the two lows that I'm watching out for. Buy on dip, sell on rally, both working. And let's see how the Bank Nifty moves, because yesterday the Bank Nifty recovered 2% from the lows. And that's something that I'm keeping an eye on. The level-based trading will not work on Bank Nifty because it's an index which moves 1,000 points either side in a jiffy. But let's see, if the first hour high is taken out, maybe there could be some more short covering. Of course, this is not the end of it. We still have to brace with some more volatility. But at least for the day, my sense is we could see some more short covering bounce perhaps.
Okay, got that, Anuj. Thanks very much for that quick outlook. Prashant, by the way, how old are you feeling today? I'm definitely feeling 25.
I don't know about how old, but Anuj should be treating us to some drinks and all that.
That's also true. Very good. That's an important cue. Missed out on that
asked. I mean, I'm always there.
You asked for it. You asked for it, said.
No, I'm always game, Nigel. To ask, that okay, take us out for drinks.
It's done. It's done on national TV.
I think Nigel will plan it, and we'll all show up.
Absolutely. You fix a date and time, and I'll be there.
Lovely.
All right, Anuj, thanks very much for that. I mean, after a certain age, you just permanently feel a little.
No, Prashant. No.
What is it? You guys were talking about raging, right?
Surabhi is a rager.
No. I think it's time to now move on and
raging. I mean, I should clarify for the viewers, right? It's partying. It's not rage. Anyway, okay. Shrikant Chauhan is with us of Kotak Securities to run us through some trading ideas. Kush Bora is with us as well of kushbora.com. Gentlemen, good to have both of you here. 9 minutes to the pre-open session, but could this extend a little bit more? Shrikant, let's start with you. How are things looking? Shrikant, I think you are on mute, yes.
Sorry. Yeah, good morning, Prashant. Good morning, everyone. I think, the markets are very clearly in the range. It is not like going to go up so easily, because 17,700, 17,800 going to act as major resistance for the market. But as the market is holding well above the mark of 17,400 and 500, I think gradually we are moving upward. Nifty IT index is showing a lot of strength. Also, Bank Nifty sustained above the mark of 40,500 and 40,000, which was something very difficult to understand yesterday because it was following to the trend of Adani stocks. But we saw some recovery. So broadly, we are of the view that maybe we are going to see the levels of 17,800 in the near term, and we should be buyer if there is any correction during the day.
All right, Kush, what about you? How would you look at things? Indices first?
Sure, Prashant. Well, when they say you need patience in these, markets, these are exactly the times they're referring to. Now, there's very clearly pressure on the street, but there's also buying interest. Otherwise, with the kind of bearish sentiment we are looking at, we should be trading, way below the 200-day moving average. But, we've not slipped below that even on an intraday basis. And if you list down 10 factors, probably 8 or maybe 7 of them, would still be positive. So for me, there's very clearly buying interest. Now, barring 4 or 5 stocks and maybe indices for the next couple of days, this is the time to start accumulating, especially if you're an investor. Now, make your list of quality stocks and get into them. As far as indices go, 17,450, is where I would place my support zone on the Nifty, and 17,800. My bias here would be slightly positive. Bank Nifty, I feel fairly confident that this will outperform the Nifty on the way up. But here too, filhal, or rather before the markets open, the view would be hold. 40,000 is where I would place my support zone. 41,500 and 42,000 are my resistance areas.
Okay, all right. Well, Kush, as you said it, right, you need to have a little bit of patience. It appears, I was just looking through a quote from Charlie Munger. The big money is not made by buying or selling, but by waiting. So maybe we're in that sort of a phase. Kush, what about the stocks? What do you have for us today?
An interesting mix. One from the sector that's been doing fabulously well. The other that's just got a bit, got a bit of a beating. GNXL from the auto space. This stock has been doing well, irrespective of what the markets have been doing. The strength is very clearly visible. This would resume its uptrend even in a flattish market. So I would say 825 is my first target, 850 is my second target here, 790 would be my tight stop loss. The other is from the banking space, which we all know has come in a bit of a pressure. Bank of Baroda, I think it will resume its uptrend. It's gone into an oversold territory, and it's already shown signs of rebound. 165 is my first target, 180 is the other, second target. 148 is where I would place my stop loss.
Okay, got that, Kush. Let me come to you, Srikanth. Your stocks for the day?
Yeah. Good morning, Surabhi. I think, these two stocks like ITC and Mahindra Finance, these are showing a lot of strength on daily as well as on long-term charts. ITC has broken its all-time highest level, which was around some 370, 375 levels in the year 2017. And after the announcement of the budget, the stock has broken this level confidently. Volumes were exceptional. Based on the formation, we are of the view that it's something really big is going to happen in the ITC. But in the near term, we are going to see the levels of at least 400 or 420. So certainly it's a buy at current levels and more on dips with a stop loss at 365. The other stock which we like is Mahindra Finance. And the reason is because there also we are seeing some continuation formation. It is forming rectangle continuation formation, and it has broken its previous supply zone. So based on that, we are expecting stock to move towards 265. So here also we have a buy rating, and we are of the view that we should be buy at current levels with a stop loss around 225.
Okay, all right. Thanks, gentlemen. We'll keep coming back to you all for calls on the index. For the time being, we'll slip into a short break. But on this other side, we'll be joined by Mr. Gua, the MD and CEO